The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, traders. Well, we've got quite a day. S&P's up almost 19, NASDAQ up 67, and the Dow is comfortably back over 13,000 at plus 89. It is Wednesday, April 25th. It is World Penguin Day. Penguins, as I call them, the silent killers. You wouldn't want to meet any of these tough guys in a dark alley. No siree. But, I don't know, everybody kind of thinks of them as soft and fluffy, and I guess they are. There's 17 different versions or strains of penguins. Of course, they live on the Antarctic, and apparently Basil is quite the fan. He's IMing us here in the den. It is quite, 17 species. It's a word I'm thinking of. Thanks, Alan, in the control room. But we got nice, cuddly, little soft penguins, but they sure do poop and pee a lot. When you look out there on those wonderful National Geographic specials, they have big, dark, nasty areas all over the nice, clean ice. But I guess if you're an animal, you go in the woods. It doesn't show as much. So, but I don't know. They look pretty good in the water. They actually don't kick their feet or anything. They actually have to move their wings to propel themselves through the water. Neat and cuddly. Unfortunately, they are only in the Antarctic. So, pretty neat. But like I said, they can one little bite and they can take your head off. So be very careful about them. They show all neat and cuddly, but vicious. Get you. So anyway, nice World Penguin Day out there. Earnings after the bell tonight is Sprint. We already had Boeing and Cat today. Boeing's up fairly decently. We'll get into that tomorrow. Exxon, Amazon, and Coinstar. Friday, Chevron, Merck, and P&G. So we've got a lot of that going on. Movers today, Owings Corning. This is a little earlier, so I won't spend too much time on it. They were off about 4%. Doesn't look like people are buying as much insulation as they should be out there, and might kind of drop into the theory that housing, at least new housing, is not as strong as a lot of people thought it might be. And we may had just a couple of real nice months kind of squeeze up a lot of that business early into January. Boeing is up about 4% today, or it was a little earlier. Certainly very nice, long, how can I say it? Just people continue to order Boeing planes out the yin-yang and are still doing extremely good. Broadcom, pin action on Apple was up almost 5%. Baidu is off 2.5%, 3%. Was off a great deal more, like almost, what was it, $15 last night or something? And it's not off quite that bad today. Qualcomm up about 2%. Again, more pin action from Apple's earnings. Everybody kind of thought that they were being written off because they couldn't actually produce enough of the 28 nanometer chips, and just a problem with actually getting those things produced by Taiwan Semiconductor. Apparently it didn't really bother how many people bought iPads and iPhones, but apparently mostly iPhones in China, where they really competed to get 4S's and pretty much saved Apple's bacon by being able to shove a lot of those over in China. It took, I think it takes about 14 days by the time they get packed in China to get over and into the supply chain here. So Apple rather smartly just went ahead and sold as many as they could in China to get them into the quarter, and certainly did. Kind of blew earnings away. Priceline up 3.5–4%, something like that today. So we have a lot of them really smoking up here. 1390 on the S&Ps right now. Volume, I would have liked to seen a whole lot more volume out here, but still fairly decent. Let's see. We've got a couple things going on here. Let me check what's going on real quick. See if we can pop something up here and make sure this works correctly, just so people in the den can see all the same stuff we're talking about. Let's see if I've got something here. There we go. It's kind of interesting as to how this is all going to play out. But I was looking at the volumes. Let's see if I can pop that back up and get a quick read on it. Just as the show started, it looked like we were going to be doing around 3 billion shares so far. So that projects out to about 3.9 to 4.1 billion shares. Still, I would have loved to seen some kind of sign of strength in here. What we have is more in this trading range of about 3.5 billion shares to 4.6 billion shares. This is going to come in just about midway through that. Not be a really decent signal one way or the other. Of course, we've got, this is the 25th. We've got just a few more days, 3 more trading days. We'll be into the fund buying season here, so we could see maybe a little weakness. I would love to see the market pull back to 1346, 1343, something like that, to set up the risk reward. I don't particularly like the risk reward setup at this moment. Wanted just a little bit more of a pullback to open up some of those, and we just didn't get it. So we're comfortably flat at the moment, but could be looking at a lot of different charts here that are setting up. Even today, actually got quite a lot in the scan last night, and we're going to go through some of those today. Let's see what else. Radio Shack, and I didn't check on this, but I will. Oh, get back to Radio Shack there. It looks, or last night, prices were, pretty much where they are. $5.30 is pretty much where they're at. Kind of interesting in that Radio Shack is back at prices that it hasn't been at since around 1980, 81. Again, kind of the same kind of thing we're seeing with Best Buy, and that is just not a lot of business. Stuck with Verizon phones for the most part, and just not being able to actually get out of the mold where a lot of people are not buying anything other than phones, and they make a lot of money on cables, other things like that. Always kind of interesting. So keep an eye on that. Radio Shack, one of the ones that looks like it's going to fall by the wayside here. When we were talking about technology and Qualcomm, talked a little bit about it on the Friday show with Tom O'Brien, and that is that Qualcomm had a hard time getting 28 nanometer chips out of production. In fact, the yield was pretty horrible on it. We talked a little bit about AMD having the same issue with Taiwan Semiconductor. Intel is one of the few companies that has its own fabrication technology, and one of the things that makes me think that Intel is going to have a great future, mostly because they've already rolled out their roadmap for new chip technology for the next couple of years. And why they are coming out with their 22 nanometer chips this week for Ivy Bridge, their family of chips with some of this 22 nanometer technology in it, and 3D dimensional transistors, where they're actually putting multiple layers in the same die with multiple cores. They're actually going to be doing atom processors on the 22 nanometer technology with 3D transistors in 2013. This is directly going after the chips that ARM's Holding has been putting into these smartphones and tablets. But it really looks like this is a huge drive that will help both Microsoft a little because Microsoft's coming out with a version of Windows 8 that's directly attacking the tablet marketplace. And at the same time, these 22 nanometer technology, even against what it normally is a 32 nanometer technology, would mean that your cost savings, at least on power, would be somewhere in the neighborhood of 45%. So if you had a tablet that could last a few hours, let's say 3 hours on a charge, these new Atom processors with similar power would be able to give you about 6 hours at the same processing power. So look for Intel to rule and dominate just on the ability, and they're probably the only ability to build 28 nanometer technology today and 22 nanometer technology now. And going into next year, Atom processors really attacking that marketplace. And they're going to do it not with speed or a lot of technology, but just basically being able to build things small. The smaller they are, the less power they take. And that's what it's all about for mobile technology. So, and the 3D transistor stuff is really important too. Don't want to leave that off, but pretty interesting. It was kind of interesting. Canadian Association of Petroleum Producers came out yesterday with their forecast for about the next 12, 11 years in production. I thought it was really interesting when we look at global oil production about what they're going to be doing. And they had some interesting facts. Canada is the third to Saudi Arabia and Venezuela in crude and oil reserves. Canada is the third in the world in natural gas production. Canada is sixth in the largest oil producers in the world. Canada is second in the world of hydroelectricity generation. So pretty interesting. What we do find out is, as far as barrels of production, from what they have right now in 2011, they are almost going to be able to double production by 2025. And we've got a nice little chart that they have out there. You can probably Google it and find the same thing I did. But very interesting technology. A lot of it is going to be from mining and their situ. But Canada's kind of the little engine that could. They're going to be producing a great deal of oil over the next 12 years. And this is just based on projects that have already been approved and are already in the construction phase. So pretty interesting. Going to double their crude production. We'll be back in just a few minutes.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, still seeing a lot of movement in the market, mostly based on Apple. Remember, Apple's in the S&P, it's in the NASDAQ, it's in all of us, I think now we can probably say that. Apple is in every single one of us. It's like the Borg. You will be assimilated. Star Trek reference there for those people that don't watch Star Trek. But anyway, we're up about 17, 18. I would have loved to have seen huge volume come in. We're going to be right in the middle of that range, so it's going to be kind of tough to see. 609 on Apple, and, I've got kind of a rule. I was talking to somebody about it in the den last night, and that is I don't short cult stocks to the extent that I can really help it. Apple's probably the biggest cult stock out there. Every once in a while I'll dabble in it, but generally I don't do as well at them. A lot of it has to do with the kind of traders, and they probably don't act like a lot of the traders in other markets. But, they've become devout believers in it, and we've seen it. For the people that haven't been around for 14 years or so, probably the closest thing I've seen to Apple were the people that were involved in iOmega and driving iOmega. Now, granted, iOmega is no Apple, but the amount of devotion into it, pretty much, I would say that it's about 30% more than the I-Omega crowd. So you've got a lot of people in here. We were talking with a caller. Let me go ahead and pull up Apple. We were talking with a caller about what kind of pattern you would be wanting to see in Apple to actually short it. And we've talked about the 3x3 displaced moving average. Hopefully the thing will pop up here in just a second. I'll come back up here. Maybe I just can't see it. Oh, I had it turned off. Place moving average. There we go. Now here's kind of the pattern set up that you don't want to, well, let me put it this way. We'll go through what you don't want to see. You had 10 to 15 days above the 3x3 displaced moving average. So you've got a nice uptrend. You close below it for 3, 4, 5 days. You close back above it, and we certainly are going to do that. Now, what you don't want is this thing to actually start closing back down below this. This would be one of the most significant topping patterns that I've ever seen. One of the other ones that you can actually use, and we'll show it here, is the parabolic SAR. And when you're trying to find these, you can see it here, you can see that once you crack, normally you get a fairly decent retracement. That we've popped back above that pretty much negates this parabolic SAR, and we're going to go back to the displaced moving averages. This average is nothing more than the last 3 days averaged for price, and then put out 3 days in the future. So as we look, today's Wednesday. At the end of today, at the end of the day, you'll have a 3-day moving average, and that would be Thursday, Friday, so Monday. And at that point, you'd know that in 3 days projected in the future, you don't want this thing to close back below it. It's probably one of the best parabolic move tests that I've ever seen. But you would want to see that, and we'll probably pop up a few more charts like that are in this kind of CMG is another one. See if we can get a similar kind of pattern. This is where it really, if you get a nice little pop out of Chipotle, now that it's had a pullback, if it gets back above that 3x3 displaced moving average, then close back below it, that is one of the biggest parabolic cells also. Price line PCLN. And it's another one. Now, this one's getting kind of close to closing back above it, but that's the pattern in the Joe DiNapoli pattern called the double repo, which is it double penetrates this moving average over twice. And pretty good setup here also in price line. And you have 1, 2, 3, 4, 5, 6, 7, 8, 9, and we're going to be closing back above it. But you get back up a little higher in price line, and then get a close back below it. But I think you can kind of see it. It's kind of you move higher, you close lower, you close a little bit higher, and then you close back below that moving average. And after a move that's been parabolic like that, that's pretty much the end of those. I certainly have that move back in the 600s on price line. I would love to see a nice little bounce out here.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
As we come back, you can give me a call at 877-927-6648. And we'll discuss your particular stock or question. I found a kind of an interesting charts out here in gold land. We've been talking about them for about the last 2 weeks, like gold's really beating out a bottom or generating a lot of energy to blow out to, I thought maybe in the 1500s before, but this thing's either going back up to 1800 or down to 1200 the way this thing's winding up. Today, right after the Fed came out, they slammed it down about 13, 15 bucks, and by the close it was right back up to 1643. So a lot of support in gold right around in these levels. One of the charts I actually found was Orico Gold. I don't know a whole lot about this one. Maybe Tom will talk about it tonight. It's kind of making a kind of a nice little signal. There was a nice gap. It came back here and filled that gap yesterday, and then turned around and had a nice little pop out of it today. What I'm looking at is this nice gap that came on about almost about 2.3 million shares on the 3rd of January. That set up that gap. It finally came back and filled it yesterday on 1.5 million shares and did a nice reversal out of it here today. And I think we're seeing a lot of people starting to get back and take a little peek at some of these gold and silver stocks. Another one that we've had that are setting up these gap fills, as it were, is AeroVironment, AV. Hang on just a second. And let me get it all there. It is designs, produce, and supports unmanned aircraft systems and efficient energy systems for various industries and governmental agencies. Basically, drones. Maybe a lot of this drone business has got a bottom in, but kind of interesting. Anyway, you've got two nice gaps that came in. What I'm actually looking at is just the volumes that have filled these bottoms. The last big major bottom was on August 9th, $24 and a penny, 400,000 shares. We got into that with basically 280,000 shares. There's one more larger gap. We're going to take a look at these. But the gap that one has come back and filled had 1.2 million shares. Not all that exciting. The lower gap on very, very light volume. But keep an eye on this, especially with a lot of the drone talk going on. Kind of interesting. It did come in, make a nice little test back here. So one to keep an eye on. Some of the others that are trying to make highs out here are Camdenton Property Trust. Everybody, if you watch CNBC very long, everybody and their dog now is talking about the real estate market. Camdenton Property Trust, CPT is the symbol on that. Looks like it's coming right up to some previous highs and trying to get above them. One that really catches my eyes is September 8th. High, $68.37, 900,000 shares. It's coming in, and it's going to be above that 38, 37 to 38, 71. It's going to be above that, but maybe, 350,000 shares. So certainly less than 50%. This thing's kind of turtling, poking its head out there, prairie dogging. Could it go just a little bit higher? There's still a $69.48 high from July 22nd, still above those, but that's kind of looked like resistance here, and you'd be looking at maybe not too higher there. So up against resistance, but another buck or so, and this thing is going to be in breakout land. I just looking at the light volume or energy all the way up on this one has always made me think that this thing is going to have a nice move in it one day to the downside. Direct Corporation is another one that has caught my eye these days. And again, you can give me a call at 877-927-6648. We'll discuss your particular stock. They are a pharmaceutical company, and we don't spend a lot on these ultra-cheap stocks, but not a bad little signal down here if you're interested in playing penny pharmaceuticals. DRRX is the symbol, and develops pharmaceutical products and therapies based on its proprietary drug formulations and delivery platform technologies. Osmotic pumps for animal research. Lactel biodegradable polymers, which are used in raw materials in pharmaceutical and medical products, and expedients for pharmaceutical and medical device clients. Anyway, as a penny stock, looks like this thing is starting to wind up some energy, and it could be a nice little pop out of this thing. Probably not quite done. What I'm looking at is the January 19th low, 72 cents on about 500,000 shares. We've gone below that. It looked like we're going to be continuing to close above that. Got to 68 cents on April 23rd with this 220,000 shares. Nice long. This may actually go a little bit longer, but these are the kind of stocks, especially in these penny stocks, that you can get back up. And if it just got back into the the $1.10 range, $1.05 range, certainly gets you to the point where you make a nice little amount of coin off of some of these, just on a nice pop back into these gaps. Another one that looks like it's auguring into the end of the world is Electronic Arts. Let me get a little bit longer time frame on it. Symbol is EA. This one is hitting long-term support from the 2010 area in the July 2010, August 25th of 2010, and November 29th of 2010. Three little gaps down here on, starting off on the most heaviest is the $14.06 low from July 1st, 2010. Looks like Electronic Arts is going to come back into that range. And, what do you have as a low here is about 5.6 million shares on April 23rd, but you're only about 50 cents above that test of a long-term low. Electronic Arts is a pretty good company. I don't know if they'll be able to turn the ship around, but certainly if you're looking at finding one at long-term lows and looking for a nice Christmas run, this is one that may be bouncing and basing out for across the summer. Normally, always a good Christmas rally in this one. Pretty seasonal stock out there, but certainly getting at probably about the best price you're going to be able to get these things at. And what else do we have? EBEX is another one that's doing a nice little test, or trying to get into a nice little test. EBIX is the name on this stock. On-demand software and e-commerce solutions in the insurance industry. As we look at this, it had a nice little gap up on about 960,000 shares. That was on the 15th of December. It's been kind of working its way back on that kind of a nice little volume pop that moved this up. And this is exactly what you're looking for on a breakout with some decent volume on the moves up. I would love this maybe one more time. We're going to get lucky into that 1950, 1975 range. We got to a low of $20.01 on April 23rd. With about half the volume that thing did pop up. So if you're really looking at buying some of these retracements, very interesting company. It is involved in designing and deploying broker systems comprising 3 back-end systems, considering eGlobal for multinational PC and insurance brokers. They've got all kinds of stuff in here, New Zealand markets, other things like that. But not a bad-looking chart here. If we could get you'd love to get this thing maybe back in that gap, at least fill a little bit of that gap. So a lot of these stocks kind of setting up very nicely. Market's still not moving a great deal for us, but we'll keep an eye on it here. Still 1389 on the S&P, up just a hair under 18 points. Off 14 cents on the dollar today, so still going to have those. Home properties, we were talking about some of these, like Camdenton Properties, finding a fairly decent resistance area, and if they go any higher, probably going to be breakouts. One of the ones that I found was Home Properties. HME is the symbol on it. We're looking at the October 27th high that had 1.1 million shares. It's also got a gap just a little bit higher, about 63 bucks. We got into that gap on the 25th, $62.01. So we've gone pretty good, buck and a penny above that last major high. But volume was very light, basically 200,000 shares, and that just isn't, when you look at this, you've got some fairly decent high volume lows. They have been tested, but, you could get probably 62 bucks. You could probably find this thing coming back into the $58 level if you watch it. But some of these, they kind of look like they're running out of gas a little. Home, Inns, and Hotel Management, HMIN is the symbol on that one. Looks like it's getting ready to come back and test a kind of high volume low for it. That last high volume low is $22.09. That was on September 30th of last year. And we're just a little bit, we're certainly into that candle. We're also into that gap, and I would love for these to trickle on just a little bit more and back down. But with 250,000 shares going into that candle, 3.4 million shares. Certainly looks like Homes, Inn, and Hotel Management and Property, HMIN is the symbol on that. Looks pretty much washed out down here at the bottom. So a lot of these signals. ICF is the iShares Cohen and Steers Realty Major. Again, we're looking at a lot of these either getting ready to break out or break down in this real estate market. The July 22nd high is what we're looking at. 370,000 shares, $76.76 was the high. We've gotten a little bit above that. No volume so far. Normally I'll give these about 3 days. You popped to a high of $78.19 with 300,000 shares. So you're going to come fairly close to it, but certainly no sign of strength. Probably going to come in about even on this breakout of this fairly large high in ICF, iShare Cohen's and Steers Realty Majors. Let's see if we can have a little. But certainly at these highs, what I dislike is the strong pull down from the July 22nd high down to the August 8th low. We've really not had that kind of energy, about half the energy all the way back up into these highs. So I think we're going to be getting a big signal in real estate probably over the next week or so, with so many of these in the real estate market giving a fairly decent signal that something's happened, about the equal of gold, without being able to break it down. International Rectifier Company, also one that's kind of caught my radar. Let me zoom in here just a little bit closer here. This one looked like it was signaling a fairly decent bottom in some of the semiconductors here over the last couple of days. The March 6th low was $20.37 with 600,000 shares. We got into it with half that on April 23rd. Got to $19.90. And are closing back above that. So International Rectifier, IRF, is the symbol for that one. You can always keep a fairly close eye on that. And but that's really the kind of pattern we like to see. Energy really coming out, and then a very 50% test of the previous low, starting to give you a fairly decent signal. And could we come back down to the absolute low? Probably could. That's the one problem that we have in a lot of these semiconductor stocks, is some existing high volume lows. This one's $17.28. So not the end of the world, about another $2 down. But right now, looks like we're in some kind of trading range that's narrowing as we continue to go on with International Rectifier. Another one. And this is kind of interesting. I don't think it's going to happen right off the bat, but it certainly looks like the Chinese solar companies are pretty much finding a bottom. I don't think that's true with the American ones, because I think they're destined to go out of business. They were never set up to compete with the Chinese. But when you look at some of these solar companies, they certainly look like they're basing out on light volume down around these lows. One we're looking at is JKS, and that's Jinko Solar. And we'll be back and talk about that. You can give me a call, 877-927-6648, and talk about you. We've got about 5 or 6 minutes left in the show. We'd love to have your phone call. Please give me a ring.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get back to watch this market close, not a whole lot of movement, up about 19 points on the S&P. One of the things that didn't happen was volume come in. We thought we'd be right around 4 billion shares, about 3.6 billion shares now. So volume very light as we end up closing out the day. I would imagine there were a lot of people already short in the markets, and probably we've got a good 3 days of them holding these markets up, or maybe even drifting a little higher on lighter volume. I would have loved to have seen 5 or 5.5 billion shares, 6 billion shares, something that really gave us a clear proof of life, a sign of strength, that we continue to come into these movements up and down with volume that's ambiguous, amorphous. It kind of makes me think that we're probably setting up to have a huge move in this marketplace. Maybe it's up, maybe it's down. But at the moment, I like to keep my powder dry, because I think that there's going to be a counter move here close. And what I would really dislike to see is a lot of those double repos start setting up in the cult stocks that we've talked about here today. Jinko Solar, some of the other Chinese companies actually starting to base out fairly well in the solar marketplace. Maybe that's because all the U.S. companies are finally gone bankrupt, but extremely light volume. Let me check on something right here. What we have is a basing pattern on Jinko Solar. JKS, this kind of set with a high volume low, the market, and that was September 29th of 2011. $4.55, 1.6 million shares. Tried to get down to it on December 19th, didn't quite make it. We still haven't quite gone and tested that 455 level on Jinko Solar, but we got about 1 million shares on March 8th. But when we really look at this last couple of weeks, looks like it's wanting to get down in that level, but the volume is just so light out here, you've got to watch it. But we're banging against that last and under that last low, $5.21 with 1 million shares. We had 215,000 shares on the 9th. We've got 200,000 shares on the 24th as it's gotten down to these lower lows. Certainly looks, as we get into these, that this thing is basing out right around these levels. Keep a close eye on those actual Chinese solar companies. Maybe there is something going on. The other thing that really caught my eye is some of these rare earth element stocks acting like maybe they've found something, and maybe this is a whole Chinese thing after we've been listening to how the Chinese saved Apple here the last day or two. Let me see if I can get a little better look at here. But we've seen that one of the things in CRE was the March 8th low, and that was 670,000 shares at $5.04. Of course, one of the two, I guess, tradable rare earth stocks out here. We got pretty much into that, what is that, 98? Maybe we're looking at another low that I saw. That's what it is. Looking at the $5.39 low, 3.6 million shares on January 25th. We've been banging against and underneath those high volume lows, 3.6 million shares. The first time 670,000 shares on March 8th. Got into that, 2 days ago with about 1 million shares. These things really kind of running out of energy, and certainly into that big move up on heavy volume from that December 29th low out here. Keep a good look at these, both RE and the MCP, both fairly interesting out here. Anyway, we'll see you on Friday.